Yeah, you can look back and say that, okay, this number in a sense did not damage the market because of domestic flows. But I would argue back and say that ultimately selling is selling. This could be because of valuations, this entire China rhetoric, money simply moving out of India after the recent bout of outperformance, whatever may be the factor for a market where we thought that post the Fed rate cut, FIs would continue to buy the market, that thesis in a sense is getting challenged. So where do we go from here? Now there is no way we can put in a template to establish that FIs will stop selling or they will not sell. But periodically when you've seen this kind of an bout and this kind of an aggressive selling by foreign institutional investors, every time when you've participated in the fall after some collateral damage, you've been rewarded. So I'm making a case that sooner than later, now you should not play for the weakness, you should play for a technical bounce. For the Nifty and for some of the FI dominated stocks and even some of the railway, even for some of the PSU stocks. So this week, until and unless something really, goes wrong globally, I think you may see the intensity of selling come down and intensity of the market carnage coming down because market conditions are already very oversold. There is no point in selling in the panic. We must recognize that even though markets are off 10% from the recent high, the YTD change in the small cap index, in the mid cap index, in the large cap index is still in double digit. So everything needs to be looked into context. One is the real performance from the fall and one is the absolute outperformance. Nobody likes a correction. वो कहने की बात है, everybody was waiting for a correction. When the correction comes, it hits you, it hits your portfolio. So nobody likes a correction. So if everybody was waiting for the correction, why is everybody not buying? So nobody likes a correction. I'll go back to that same point again that it's not for the first time this market has seen correction. But when these corrections have happened, what has differentiated? It's discipline, it's long-term strategy planning, understanding the momentum and hunting for value. These are the 4 variable factors in which you approach the market. When the dust will settle down, when the cycle will reverse, you will emerge as a winner. I'll say it again because it's important for us to establish it again. In a rising tide phenomenon, it's very easy to get carried away. And in a receding tide phenomenon, it is very easy to get scared. Markets are about selling the greed and buying the fear. So the greed part is over, now the fear part comes in, and that's the time you need to be a buyer. Imagine if you wanted to buy a car or a house or a merchandise and suddenly you see, okay, 30% free. Would you not take that opportunity? Well, you will grab that opportunity with both your hands. So I think we are reaching there where suddenly everything is looking cheap. Some justified, some not justified, which we'll talk about. Sure. Not everything in this market is great, but yeah. So I'll give you a punchline which I've learned. I went to a lot of so-called Diwali parties or the weekend HNI party.
Did you win the poker game or not?
Never been lucky with cards. They say unlucky in cards, but lucky in life. I like to believe in that phrase. That's what they say. No, so I think I'll tell you what has changed, Aisha. The definition. We were in a bull market, but we are in a bull market and a bear market now. That has changed. Bull market and bear market will coexist now for some time, which is you could see one stock in one sector could have 2 parallel examples. A stock which is in bull market, a stock which is in a bear market. Now bull market and bear market will coexist. That's the new line which I've learned over the weekend.